Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, April 10th, CPI day, and we got really bad news for the market. Expectations were not met, and in terms of core inflation rate, we were expecting 3.7, and we got the same value as the previous one, 3.8, so not decreasing. Month over month, we are in the same situation. Inflation is not progressing. We were expecting 0.3 and we got 0.4, the same as the previous one. And in terms of the headline inflation, we got an increase. We were expecting from the 3.2 to increase to 3.4, and we increased 3.5, more than expected. That's year over year, and month over month, again, the same picture as the core. 0.4, the same as the previous one. We were expecting a decrease, and I think all these four data, it's a miss. The market basically dumped, and we are seeing a lot of adjustments in the rate cut path ahead. And the first thing that you are going to notice is that, look at this, 15% probability of interest rate cut in June. We are now pushing that to 84% of probability of no rate cut in June, no rate cut either in July with 60% of probability, and then the first rate cut will be in September with 45%, but still 45, 36. Let's see what happens. And we are only pricing in one interest rate cut. This is December line, and we are only pricing in one interest rate cut. So the situation completely changed after today's CPI. CPI is not seeing progress, is not seeing the same kind of diminished values that we got on 2023, and that basically destroyed the market today. This is the 15-minute chart, and remember that yesterday we got quite a bit recovery of that big sell-off. I uploaded a video yesterday saying that the Nasdaq was basically manipulating all this zone for the nice push down, trap a lot of shorts, and then move higher and breaking high of day. This was pretty bullish to me, and actually this is the 15-minute chart. I was watching basically this inverse fair value gap up here and all this liquidity that we've been building. So during the overnight, we just we got, I didn't trade today, by the way, we got the manipulation move higher, and then we dumped. This is the dump that I was waiting, but I was waiting just at this order block on the 5-minute. This order block was my target for buying the dip into a good CPI number. We never get to that level, and that was unfortunate because unfortunate now that we see in hindsight that the CPI is not longer valid, but I would like to buy this dip, and then I would have a really nice trade into the value. But once the data came out, we took the liquidity up here, and also on the ES. Look at this. We took the entire liquidity, the same liquidity that I was watching on the Nasdaq. We took that on the ES and also, excuse me, and also on the Nasdaq with the data, and then we dump 350 points in just basically 5 minutes. So let me just show you the data and then the flash. 353. I had these levels marked. I have this liquidity, and we also didn't took this liquidity nor this liquidity. These are coming from the pivots from last week's, and I was expecting really to see the market actually taking that liquidity and then and then trying to do what it's trying to do. But after the really bad readings, the markets changed. Every single one of the big tech stocks basically dumped. Apple, Microsoft, Tesla, Amazon, Google. Amazon is recovering a bit, but Google is also on the lows. Nvidia is the only thing really pushing today because basically it has its own catalyst AI. We are feeling partially this gap, and after this correction that actually it's from the all-time highs, it's basically 14%. I think people is taking this 45 EMA as a pretty maybe dollar cost average position for long term. Who knows? But the rest of the markets are really suffering. Every single market that was expecting interest rate cuts in June was down. Gold, copper, silver, Europe, small caps -3%, and all the banks. Look at all the banks. Every single sector is in the red. So today is just a day to, okay, we missed the expectations on the CPI. We have to think about what is happening short term. And I think short term, the best thing to acknowledge what is happening is see the dollar. Dollar is really pushing higher 1% today. Look at this push. So if you are looking for an afternoon trade for the power hour, V reversal, and buying the dip, I would not do that. I would not recommend doing that with dollar this bullish. And not only dollar, the 2-year yield spiked 4%. And it's now almost, it tapped the 5% magical number of huge pain. The 10-year 4.5% reaching today, up 3.73, and all the interest rates futures at this side are in the green. We got May, June, July, and September. And if you notice which is what is the one that is actually pushing forward, this is September interest rates futures up 2.90% and showing a value of 4.16. And actually, that is why the markets are not pricing in anymore an interest rate cut before September. This is the real pain. So markets, also treasuries are breaking down. High yield corporate bond, junk bonds are also breaking down out of this consolidation. So you have all these correlations that are actually correlated, inversely correlated divergences with the equities and the stock market. You cannot ignore that. I would like to buy, I would like to be long for the Nasdaq. I'm a bull, but today is not the day to take those kind of positions because basically the expectations were destroyed. We have the Fed Watch tool watching, the Fed Watch tool showing us no interest rate cuts until September and only one. Remember that the Fed was projecting 3. Markets were super bullish because of that, and now everything is destroyed. Every dream of a lot of interest rate cuts into earnings were today demolished. And we are seeing convergences in other markets, correlations. So I think today is a day to just take a step back and do this kind of analysis that I'm watching, I'm gonna do with you. So the first thing I would like to show you is that this is the the bullish fair value gap on the daily that we are still holding. So this is the only thing that stops bears to really push the market down into the infinite. Perhaps towards 17,800 or something like that, because there's another daily fair value gap down here. We have all these shorts. This zone is unbelievably full of shorts, and now they are taking the control, not yet on the daily, but on the 1 hour chart. It's basically just shorts after shorts after shorts. A lot of people got caught here buying the data, but buying the number. And I think this low here, if we break that today or tomorrow, bears are going to be super aggressive. And we will be entering another phase of the market in which we have to really be patient and disciplined to watch our levels. And if all this zone was distribution, then there's a lot of potential to the downside with fundamental support, negative support on the fundamental side for inflation. The only thing that can help is AI and the FOMO and perhaps some earnings from banks starting tomorrow, Thursday and Friday. But today is not the day to push it. Just leave the market alone, let the dust settle, and let's see some levels. Let's watch which levels hold. We can remove this. This is already taken. I would like to keep that. This is gone. This is gone. And this 15 is I mean, there's a huge waterfall of shorts here. So this range it's unbelievable. This is the last line in the sand for the bulls. If bulls cannot hold this either today or tomorrow, I mean, I can see the market really pushing down like to 17,700s or 600s. I can see the market going down here. Because on the fundamental side, we've been seeing how this market is quite dull, and now with the fundamentals being so negative, I mean, there's a lot of probability for a downside. Let's see these levels. I'm watching this 4-hour fair value gap. That is basically the big push into this consolidation. So there's a lot of imbalances here. Let's see how the market reacts if we reach this area. And later on, if we go through this bullish fair value gap, we have another one on the daily. There's a lot of imbalances down here, a lot of the liquidity that we have to start analyzing. So, I mean, it's a big day of missed expectations. So you have to really think twice, be smart, and take it really easy. Because today it's super red. It's super red. So my only recommendation is watch your levels, don't trade power hour, see tomorrow and after tomorrow and reassess for next week. Fundamental analysis takes time sometimes to really affect the market, not only in this candle, but for a continuous move through time. And we have to really be patient and be disciplined and manage our risk during this time in which big money, big investors are taking positions. Don't be quick. Don't overextend before the dust settles. That's my experience. Trust me. You don't want to take absurd and insane trades right now, losing to FOMO, and just wait a little bit. That's the best advice I can give you. And I think that's all from my side. As always, thank you for your time. If you found this video useful, please support the channel by liking it, by subscribing, by watching the videos. I really appreciate all you people watching my videos and supporting the channel by subscribing. I'm going to keep doing what I do. And if it's with your help, that's super appreciated. I really appreciate your time watching, because I put in a lot of efforts in these videos. Remember that on the weekends, we have also the weekly recap. So I'm putting a lot of effort and time into these videos, trying to transfer my knowledge and my approach of these markets to you, to help you develop good practices and good processes to really trade whatever market you want to trade. Patience, discipline, risk management, you know all that stuff. You know what I have to do. You know what I want to say. And more than ever, this is time to just take 1 or 2 steps back and reassess the situation of the market. So thank you for your time. Stay safe and see you tomorrow.